I'm very candid. I don't like cookie cutter speak. And that if any of you were actually interested in working at the Fed, I can share with you, what it is like working there, and I'll get into that in my experience. And I don't want to bore the investment club here with a history of the Federal Reserve. I'm sure that because you're already in this club and study finance, that you're already well aware of the Federal Reserve's role as the governing body to implement monetary policy. Of course, they've been in the news for putting up facilities to help support people and businesses during COVID and responding to these crises. But in particular, it's weirdly structured in some ways that the district bank is private. It's not part of the board, yet we just carry out roles and responsibilities, certain responsibilities that are mandated by the board. To the right, you'll see I've listed all of the FRBNY groups. There's 10 of them with support of the executive office. In particular, I want to highlight supervision, which is the group that I work in. And just a note too about the Federal Reserve Bank of New York. I know that there's other districts that you could potentially work for if you're interested in, but I'm biased in that because New York is such a big financial hub, you're so exposed to so many more of the bigger banks like JP Morgan, Wells Fargo, Bank of America. They're part of our large financial institutions portfolio, and they are globally systemically important banks. So the exposure that you get in New York is so different from what you would get in Boston, where I'm from, where you see banks more regionally, or even if you're out in the Federal Reserve Bank of Chicago, where you see a lot of smaller community-sized banks. So a couple notes though about supervision. It focuses more on regulation and the safety and soundness of making sure that there's a safe and sound banking system, whether it's for domestic banks, foreign banks that we also have present here, and also the large financial institutions that I mentioned. I had started working at the bank just 2 years ago in July of 2019. Oh my goodness, it feels like eons ago. And I wasn't actually quite sure what my role entailed. It actually has a lot of overlap from my previous role in auditing, where you do have to scrutinize financial statements and go through certain like legal documents and financial information to be able to form a conclusion about a bank. So as part of my role, we just have to examine, and my role as a capital markets risk associate, I focus more on the risk stripe of credit risk, but it's also to inform regulatory bodies and the public of the health of a bank, which after 2008, it came to light how weak certain policies the Federal Reserve Bank implemented actually were. So certainly we were under scrutiny. The investment club here, I'm sure that many of you are looking at the big investment banking, like at the actual banks, JP Morgan, Wells Fargo, Goldman Sachs, et cetera. But are any of you actually interested in either regulation or anything that relates to financial policy or regulatory affairs? It's fine if the answer is no. This isn't for everybody. You can shake your head, give me a thumbs up. No.
Do you guys appreciate and know like exactly what that entails and what you could do from there if you went to a bank?
I think like if you gave a better explanation that.
Wait, say that again? Or is that me or to Peter?
If you can give a more detailed explanation of it.
Oh, of what supervision is, or the Federal Reserve in general? Well, oh yeah, so here's what I'm thinking in terms of undergrad specifically when you look at investment banking. If you guys are looking at the bigger banks, I think of your positions more as sales. You go out and find clients, find the clients that you can create pitch books for and create trading positions for and complete sales and execute sales. So you're more on the market side. And actually the Federal Reserve Bank has a group, the markets group, which monitors that. I'm not part of that. I'm more of the supervisory end, which conducts examinations to understand if the bank is, a certain bank is complying with rules and regulations that's set out by the Federal Reserve Board. In terms of career opportunities that are in my line of work, that includes regulatory affairs. So there's all these different policies that the Federal Reserve Board implements in order to cover different risk stripes like liquidity, credit risk, cybersecurity, technology risk, and all. It's a little bit more structured and regulated than what would be in investment banking or, let's say, consulting, or even any other general finance position, just because of the structured nature of regulation. That's a lot of speak for my job is in a box. I have to do my job in a box versus finance, I feel like can go, doesn't have as many limitations because you're on what I consider like the sales side. But I don't know if anyone's career trajectory is necessarily interested in regulation, or are you looking to be more like a financial analyst or associate for an investment bank? That's, I think, a clearer question, is if you're more interested in the track of actually working for a bank versus for a regulatory body. And I don't know if you're where you are in your career paths, if you're thinking about that. You're all so young, please, you have so many years.
I think it's very important and it's very interesting to learn more about the regulation, things like that. But as career-wise, I'm more interested in the investment banking side, but that can always change. Like you say, we are young, that might change over time. So it's very important that we know what else is there and understand them.
Go ahead.
Oh, that's it. I don't know if anybody else wanted to say something.
Alyssa, to that point with that you're on the regulation side, do you think, what do you, and I know you said you had a non-standard kind of career trajectory, but if you did position outside of regulation or you went back to the private sector, what do you think, a public sector rather, what do you think would be open and available to you after that experience?
Sure. So, okay, I'll take two tracks with that. So if people hightail it out of the Fed, and actually there have been a lot of turnover, particularly in COVID, because the big banks, if people are leaving the Fed, they either go to the big banks. This is like your JP Morgan, Citi, Bank of America. They go there because the job of regulatory affairs is very high in demand. It's because the banks struggle to be able to read and understand and interpret regulation that's out there that's set forth in our SR supervisory regulatory letters by the board. So if you had someone that was at the bank who goes to a bank, when I say at the bank, at the Federal Reserve Bank, that goes to a commercial bank, investment bank, then they're highly, highly valuable. And those could be in, let's see, yeah, they're all in just regulatory affairs. They could be in compliance. Some of them go to legal, or they could specialize in particular risk stripe, like I mentioned, liquidity, interpreting, compliance risk, liquidity risk, credit risk. That's actually very common. If they hightail it out of the Fed, it's into an actual bank. Or if people leave the Fed and go to the public sector, other jobs that I would be looking at are actual board positions, or the OCC, the Office of the Comptroller of Currency. It could be the FDIC. It could be OMB. So very much related to finance. SEC is also common too. So there is a lot of work. There's a lot of different types of jobs that you could transition into, but the commonality is the intersection of finance and regulation. Also, if you have a certain license, like a examiner license, which I am studying for, you become so much more valuable because that trains you into understanding how to analyze like the health and conditions of a bank. But I will say that the trend of leaving the Fed is common, I think, in the younger generations, just because the environment, I'm getting to the culture piece a little bit, is a little bit slower. And that's why I think I tend to find that either new grads or undergrads or even grad students will probably go to an investment bank just because it is much faster paced. That actually brings me, could you go to the next slide, Kelly?
All right.
Thank you. I'm sorry, I'll pause there just in case if there was another question before I kind of get into my experiences. And I also want to be mindful. I think I'm still good on time.
Yeah, maybe the only question I had, the exit opportunity from the Fed to maybe IB banks is something that you've seen. Is it also maybe relevant that IB banks are recruiting people from the Fed regularly in like those regulatory positions?
Yes, and that's because if one person from the Fed goes there, they're going to know all the people at the Federal Reserve Bank, and they're going to know who's good workers, what they've worked like before. I mean, that's very common. It's like if someone leaves Deloitte for the private sector, they're going to want everyone else they knew at Deloitte who worked in finance to come work with them. However, there is a period called like freezing. You kind of actually have to work with ethics on this. They sent out an email the other day about if you're seeking career opportunities because they know there's like a mass exodus out of the Fed. I think it actually is linked to salary reasons as well. Of course, you get paid so much more at in the private sector than you would for the federal government. But yeah, they're definitely, it's both sides that a lot of people at the Fed are actively looking, and a lot of people at banks are actually also recruiting.
So is there a high turnover within the Federal Reserve that you've seen?
So yeah, I mean, it's a function both of that it's a huge organization, like there's 2,000 or 3,000 people who work at the Fed. So naturally with just a big population, there's going to be a big exodus. I think that I've seen a higher turnover with Gen Zers and millennials. It's the crew that is who have, let's say, kids that they need to take care of, or the older generations that actually like that it's very stable, that there's actually a really big work-life balance, they stay. But the turnover is in the Gen Z and millennial population, which is not really surprising. I mean, I feel like that's common across all like organizations because we're so fickle.
Right.
Okay. So I guess I can get into then my experience. I was recruited. Actually, I wasn't even recruited. The Federal Reserve Bank does not recruit on campuses. So you will actually never see them have a tent at a career fair at any school. I think it's part of their, it's because they do hire a certain type of candidate. Mostly you'll see them hire American citizens, but also that people who have both a finance and regulation background. It's only certain exceptions, like if it's a diversity group they're trying to recruit for, maybe you might see them at career fairs. So they do have a talent website. It is called Talio, and I found my position through that network. And it was interesting because when I started working or got recruited at the Fed, I applied for a supervisory development position. And that is a one-year training program where you are acquainted with different aspects of the bank, and you train in a different function than where you are finally placed. So I started in the summer of 2019, but I only got my full-time position just a year. It was a year after. And I think when I first started, I had like 6 interviews of 3 different levels, 3 different rounds to be able to place you. Again, it's a really big organization, so they just really want to make sure that you're a good fit. They're very slow though. I would imagine that so many of the regulatory bodies, whether it's the SEC, OCC, even the White House, they were very slow with being able to recruit you, interview you, and then actually extend you a position. It's not like the private sector where they probably give you a notice after 2 weeks, whether you've gotten a position. But hiring for it, they actually like to do it. If you're right from undergrad or even grad school, they like to do it in cohorts. So I started with a cohort of about 20 people, and it was nice to actually have a lot of colleagues who I could relate to, some of them who are very much my best friends now in New York City. And you train together at your specific service line and also your risk stripe. But that's, I think, one strength of the Federal Reserve Bank of New York versus other districts, that they have a very developed talent group and also program to train new hires. Let's see. Okay, so the second point of right now, I am a capital markets risk associate. I mentioned that I focused mostly on the risk type of credit risk. Right now, my team is going through a capital exercise. It's called CCAR, and that's to determine whether the capital adequacy of a certain bank is rigorous and rigid enough to withstand certain stresses. So, of course, in the last year, banks saw a lot of stress because of COVID. And in this environment, it really put to the test, like it did in the 2008 recession, if banks are able to stay afloat even in the face of stress. And so right now, I'm actually starting a busy season of determining through bank examinations, speaking with the firm, challenging their policies and procedures and such, to see if it actually meets the standards that's set forth by the board to be a safe and sound firm. That's very general. Behind that is a lot of examiner data and research and statistics that we have to conduct to be able to opine on the strength of a bank. Sounds exciting, right? I'm actually trying to stay afloat. Just before this meeting, I got so many emails from my team about trying to set up meetings with the bank. And it's interesting because we do all these meetings virtually. I know I'm kind of skipping to the posture in the COVID environment. But if it means anything to you, I think that it's easier to have meetings. Sometimes they put too many meetings on our calendar. Banks right now, I think they are mostly working from home, but there's certain sectors that are like people on the trading floor who are trying to get back into office. Prior to this, we would actually meet with the banks in person to have these meetings, but right now we're just in a virtual environment, and we have been since March of last year. It's been hard, really, really hard, I think, to adjust to that, but we've made it happen. I think I'm preaching to the choir of students too, who I know have been gypped of a school year. I can't even imagine what it's like for you kids to be able to go through this. I couldn't. I'll stop there just to see if there's any questions. If not, I can keep continuing with bank culture.
Yeah, I have another question. So I think a lot of what you said was making sure you go into the banks and you make sure, I guess, that they're sound from a very high level point of view.
Right.
I think it was like in 2019 with the repo rates that was happening with banks borrowing, and the liquidity requirement maybe increased at the Fed because it was just, I guess, turbulent times.
Yes.
Is there maybe anything you could speak about that, working at the Fed during that time, or what it was like?
That was covered by, I think that was September 2019, right? So that was covered by our liquidity department. I was not involved in that. I was still in my training program. I wasn't sure what was going on, but I know that we had to respond to that. I think it was the dip in, I can't remember it in what context, but what we had to do is, okay, this actually might be confidential. Anyway, so how the Fed responded is that they had to react in the way that Jerome Powell had to issue some statement about how the Fed had to respond quickly to it. And our president, John Williams, he also had to make statements on how, this affected markets and how the Fed would react. Now, one thing that I would say that I think they did well is that they were able to respond to it fairly quickly. And I think those rates had revived after just like a month or two or so. As part of my role in supervision, I know that we have to monitor like the rates and the MIS of all the banks and how that affected them. That's a really roundabout way of saying that we just had to respond to the crisis that was going on with repos. And I'm sorry that that's not a really great answer, but I was not as involved in that.
I appreciate it anyway.
Yeah.
So do you want me to go on the next slide?
I'm sorry, what, Kelly?
Next slide. Yeah.
Oh yeah, I'm sorry. We should Sorry, I'm like getting into this. I love talking to you guys because it's so fun talking to students. Oh yeah, so the next slide is our career opportunities at the Fed. As I mentioned, they are, we actually do have opportunities at every level, and I just aggregated this from our career website. I don't think you mentioned that there were freshmen or sophomores on the call, but for freshmen, we do have a one-day, it's a diversity program, but it's basically an introduction into the Fed and the kind of like offerings, I guess, at the bank. And then for sophomores and juniors, we actually do have 8 or 10 week internships that you can also apply for across different groups. So not just supervision like the one I mentioned. For seniors, there is if you go to the next slide. So for juniors, juniors in particular, you can apply for a summer internship if you are, yes, if you're graduating in, I think as late as like May, you'll be able to apply for this. I think they these applications open up as early as August and then close sometime in November. But I think that these are, well, they have been conducted virtually, but it gives you a really good flavor into what it's like working with the bank. I worked with interns last summer, and I know that their curriculum was altered so that they had to work on exams, but they also had to create like a report on some topic or like related to COVID. And I think the reason why they did that is just to alter the agenda for students. But we are offering it at the very least. And that's one thing that I did want to mention too, is that even in the midst of COVID, we are still offering internships. We're still offering full-time positions. I haven't heard of anyone being cut from the Fed because of COVID as compared to other investment banks or other professional services firms, given the environment. So we are still fairly stable in that we still have a lot of positions that are open. And seniors, so you of course wouldn't be able to do an internship, but we do have postings that are available for full-time hire. So I did not intern at the Fed, but I did apply as a supervisory development associate. And like I mentioned that this opened up in November, and I didn't hear back from the Fed until February. But there are positions that are open as a rotational program in supervision, in markets, and research and statistics, which is what I listed under the seniors there. So if you are interested, check out the site and also create a talent profile that I mentioned here in this listing of telemetry. And that way you can also stay informed of notifications and other job postings that come up. I also recommend to look at the early, I think it's called early professional career section, which would be more of your level. And if the Fed ever did arise as a potential career opportunity in the future, there's also a bucket for the experienced hires. But they hire from every level, from fresh grad to 20 years of experience at a bank.
All right, Alyssa, one question on that.
Yeah.
Does that mean the current juniors who will be seniors come September, is this already closed for this summer?
Yes. Well, so because the interns would have been already chosen for the summer. So this would be an internship for next summer. So I guess I should have said rising juniors, not juniors currently. Although the juniors currently could also apply for full-time positions, because I think the Fed is able to allow you to defer. I'm not 100% sure about this, but I knew it happened for someone to defer full-time positions for like a year.
Thank you.
Oh, okay. So I just wanted to pause there to see if there's just any other questions before I talk about something that's also a great opportunity as well, the Fulbright. Okay. So I had mentioned that I was previously a Fulbright scholar, and this was in the midst of resigning from Deloitte, this was, I think, only after 2 years of working full time, that I decided to apply for the Fulbright U.S. student program. And this was kind of my opportunity to exit from public accounting, which is no one's favorite career. I don't care if people try to sell Big Four to you. It's no one's jam, I promise. So I just wanted to get out of that career and into something that I think I was more passionate about. So that was at the intersection of financial policy and regulation. So I applied for this program, and the applications for it recently opened last week. I think March 31st is when it opened. And here I just have a who, what, where, when, why about the Fulbright U.S. student program. But I wanted to speak about it because it was a really transformative experience to be able to research and study abroad in the Philippines, where my family is from. And the Fulbright program is a fellowship program where you can either do a teaching assistantship, like an English teaching assistantship, or you can study some topic of your choice. And I did the latter, where I studied financial inclusion and accounting. It was an interesting intersection in the Philippines. Plus, you get to be able to just live abroad in another country. And I think that even though they're in the midst of COVID, they are still trying to send over students. However, they have done some of these virtually. Callie, I know that you mentioned that when I brought this up, there might have been someone who was interested in this program, if people were interested in joining this, because all of you are eligible. It's open to recent grads or soon to be grads. And considering that I haven't left the country in over a year, and I love traveling. So I would highly recommend to do this, because then it would be a reason to be abroad and use government spending in a really fruitful, effective way.
Yeah, as we spoke about, I think last time we spoke about 6 months ago, I was really interested in it because I think it's a very nice opportunity, and I'd love to study somewhere abroad and be able to expand my horizon. And I hope someone in the club are like the opportunity and will apply for it.
It's a rigorous process, though. I mean, you don't go into it lightly. You have to develop an agenda. You have to develop a proposal. You have to get letters of recommendation. I mean, there's a lot of things that are involved in the Fulbright U.S. student program. It's an investment too. I think I had to actually think about this for almost 3 years before I actually applied. And this is actually what propelled, I think, my career forward. That if I didn't resign from Deloitte and if I didn't go on the Fulbright, I probably would have never gone into Harvard. If I didn't get into Harvard, I couldn't have worked at the White House. If I didn't work at the White House, I couldn't have worked at the Fed. So it kind of was all in tandem, that I just kind of built off one milestone to another. But it's certainly an investment. If you go to the next slide, I listed a timeline for it. For those of you who are interested, it's open until, I think, October is what I wrote. Yeah, October for the deadline. And I don't know if WPU already has some kind of partnership, but you do need like a project sponsor from your school, or you can do it at large, so on your own, to be able to apply for this. And finance, actually, I think one reason I was able to land this is because the Fulbright is often thought of as the humanities or the sciences. It's I guess lends itself to more research than finance or business does, but they're also hungering for other schools of thought. So I think that I think that there's definitely a lot of opportunity there too. That might have been, I think, my last slide. I realized that there were a couple things at the Fed that I forgot to mention as part of like the experience or culture, but it's okay that I hadn't mentioned that, because honestly, I'm more interested in hearing from students, questions you have, I don't know, advice looking into financial careers, or even grad school, if that's something that you'd also be looking into. So I will pause here, and I know we have 15, is it 15 minutes until, or maybe like another 10 minutes until the end of your meeting?
I guess 15
This
minutes.
goes till 1:30, right? Or like 1:25?
Yes.
Okay.
I remember we were talking about a program you did in the UK. Do you want to tell us about that a bit more?
Can you say that again? I'm sorry. The program in the,
In UK, I remember you did a program in UK.
oh, you mean the UNDP program?
Yes. You want to talk about
Oh, yeah, no. So I mentioned that a little bit earlier, that the UNDP, United Nations Development Program, I was only just an intern for that for a couple of months, but it allowed me to getting my foot in the door working for a large non-governmental organization, intergovernmental organization. And it got me to work with a developing country, so the Philippines, and I was able to research the intersection of business inclusion, economic development, and also emerging economies all in one internship. Granted, it was very short, but the research that I had conducted actually went into a publication for the UNDP. So I was excited about that. And then that also helped me get my research in the Philippines completed too. But the UNDP is such a huge organization, part of the larger UN network. And candidly, I'm very interested in still working for them, maybe further down the line when I'm more experienced in finance. And then also I'd be interested in transitioning to some role in finance at like the Secretariat, which would be really cool.
Thank you. Do you guys have any other questions?
Can you, Alyssa, as part of the capital markets group, is that you are sitting with the banks to make sure that their policies, their protocols are sound and therefore they're safe? Is that fair to say?
Yeah, that's one of the, yes. So as part of supervision's goal and the goal of the overall bank, that is right.
Can you explain that a little bit more clearly for the students in terms of what exactly that entails?
Yes, actually what I had up was the job description of my role. Okay, so safe and sound. These words, I think, entered our lexicon, our dictionary of the Fed because of the 2008 recession, which exposed so many weaknesses in how the Federal Reserve Board and banks governed the private banks. If a bank is safe and sound, they are adhering to policies that are prescribed by the board. So let me take one example of COVID. We'll do COVID. So there's a lot of operational risks that COVID created. So for example, this made a lot of people or bankers have to work from home. And as a result of working from home, people didn't have the right technology. People didn't have maybe the right access or infrastructure to be able to do their jobs. And that creates something called like an operational risk. And because of operational risks, there might be delays in transacting making certain transactions or deals go through. And that delays or that slows down a lot of bank operations. And that poses an actual financial risk. Now, banks are required to quantify and address certain operational risks. That is part of the board's mandate. You have to identify them, regulate that. You have to also escalate it. So in COVID, it was very clear to the Fed that we need to be able to examine operational risks and make sure that these are addressed. Now, this is just like one very, very specific example, but does the bank implement in a time of crisis safe and sound policies to potentially address operational risks that arise out of crises? Candidly, I think last year, because of how quickly everything turned, because of a lot of chaos in the markets that ensued in March, we actually had a hard time being able to regulate that and assess exactly what safe and sound looks like. But that could mean checking the box of, does all of the analysts who are working from home, do they have all the proper equipment they need to be able to do their job? That could also mean, if they weren't able to transact certain deals, were these escalated to the proper governance bodies? And if, as a result of that, they suffered some operational loss, is that documented or identified somewhere? So these certain parts are like prescribed in what's called an SR letter, supervisory and regulatory letter, that explain what kind of risks are mapped that jeopardize what safety and soundness looks like. And that was just one example.
Excellent, thank you.
I have a question if nobody's going to jump. Maybe just, it's not as technical. You said one of the selling points with the Fed is the work-life balance. I think a lot of us, I've seen maybe the article with the Goldman analyst with the 80 to 100 hours a week. Can you touch on the work-life balance? What is that actually? Is it out at 5? Can you talk about that?
So from my experience, the Fed is I think it's true to its work-life balance, meaning that you can come in at 9 and be done by like 5 or 6. You will never hear of people really working 80 to 100-hour weeks. Your analysts are never worked like that. And I think it's because the Federal Reserve Bank is on the side of power. So it's different because when you're an investment bank and you are trying to execute a deal that's worth millions of dollars, you're at the mercy of your client. And your client can look to another bank or fire you. But what's different about the Fed is that we don't have competition. I'll just be candid. These are my opinions, right? We don't have competition. Who's a competition of the Fed? We don't have that. So we are on the position of power, and that's why we have a better work-life balance, because we can set deadlines. We can push back meetings. We can tell the bank to do this and this and this. And that's, I think, one of the underlying reasons why we are able to have a better schedule. Now, for me, I guess I'm in a busy season in that I could probably push like 60 hours, but that's nothing. There were times when I used to work in the private sector until like 2 in the morning, which was crazy, like pushing like 100 hours. And because of the good work-life balance, actually, there is a higher retention rate among the older generations or the boomer generation because they're trying to find flexibility in taking care of their kids and such. Also, another thing about work-life balance is I actually have a schedule where I have every other Friday off. The bank has implemented this policy for my group, supervision group, and that is a nice perk to have, that every 2 weeks I have Friday off. And then also right now in a COVID environment, we don't really have necessarily a 9 to 5 because they understand everyone has different schedules. So like if I need to block off 2 hours of my calendar in the day, like, or do something like this, I can, and I can just make it up later. But I promise you, this is not like that Goldman Sachs article. That was actually crazy. I don't know how people actually can survive on only just a couple hours of sleep a night.
Oh, that's
Not
really
at the Fed.
interesting. Yeah, thank you.
Not at the Fed.
I thought the Fulbright opportunity was like really interesting. Can you explain more about your experience in the Philippines? And I'm not sure if you mentioned how long your program was.
Oh yeah, sorry. So so my Fulbright program, I opted for a research position. You can either do a research or a teaching position. And it was a 9-month grant. So I was there actually for a little bit longer because I just wanted to vacation longer. Some of them actually can go anywhere from 9 months to 2 years, depending if you want to do a degree seeking Fulbright opportunity. But I had decided to submit a proposal for a research position in which I had to be affiliated with a university, one of the top universities in the Philippines. It was Ateneo University, where they had to accept my proposal for what I researched, which was at the intersection of sustainability and business inclusion, to be able to help poorer populations in the Philippines. And throughout these 9 months, I basically just had to go on interviews, and I spent a lot of time in the library trying to research this new topic in the Philippines. And it was part of this collective effort. The bigger picture of the Fulbright is to advance and foster good cultural relationships between the United States and another country. And then the goal, I guess, is for students, yes, to become better global citizens, but also for you to take your Fulbright to some, I don't know, elevated level, whether it's going back to graduate school, which I did, or potentially working at the Fulbright, or working for some large intergovernmental organization that where your research proposal was useful. But there's a lot of components that I could speak to about the Fulbright. And if you had more specific questions, or if you thought about some research topic that you were interested in, I'd be happy to speak more with you about that. But you get a really good sizable grant, especially if you're in a poor country. I think mine was like $10,000 for 9 months, and you can live like a king on that, especially if you choose a more developed country. UK, probably not, but Philippines, sure. Kelly, I knew that you wanted to do a couple or have a couple announcements with your club. So I don't know if I should let you take the floor there, knowing there's only just a couple minutes left.
Sure. If nobody else has any questions, Joe, you can go forward with the announcement that we have. What? Miriam is saying thank you for answering her question. For some reason, you cannot hear her.
I'd like to take a second. Thank you so much, Alyssa. This was great. And we will be resuming in-class activities in September. So I assure you that any future talks, if you are on with us, will be far more attended.
Oh yeah, no, this was great. Thank you so much too. I appreciate your questions. I know that some were either too vague, or that I had only just given a brief description, but happy to elaborate on any of them in a follow-up over email. Or if there's anything I can do to help any of you with making connections, I'd be happy to do that as well.
Thank you, Alyssa.
For taking the time, Alyssa.
Thank you.